Well, while the Dow and the S&P posted losses on Tuesday, the Nasdaq did rise to an all-time high. Joining us now, Stephanie Link, Chief Investment Strategist at Hightower and CNBC contributor. Steph, great to see you. Big tech and tech in general continue to outperform. It has done so for the past month or so. Lower rates have really helped. Do you think that this environment continues for much longer?
Yeah, I mean, I think FANG and growth are kind of trading the same, right? And they've had a great recovery in the second quarter. This year has been all about rotation. I feel like I talk about that all the time. The first quarter, value outperformed growth by 12%. And then in the second quarter, we saw that spread narrow to 2%. And it is because of low interest rates. But it's also, I think, because people think we've seen peak growth and that inflation is transitory. So it's all kind of like one and the same. I'm in the camp of that growth is going to be stronger for longer, above trend, maybe not at this level, but I do believe it's going to be above trend. And I also think that inflation, parts of it are not transitory. So I think you want to have a blend. You certainly want to have exposure to FANG and to secular growth technology companies. They're such a big part of my benchmark, which is the S&P 500, Melissa. So you have to have exposure, but you want to pick your spots along the way.
Yeah, I noticed in the notes that you added to Amazon 2 weeks ago, which is pretty good timing considering it hit an all-time high just in yesterday's session. And I'm wondering at this point, what do you do with it? Are you trimming your position just from a portfolio management standpoint, or how do you see it at this point?
Yeah, I mean, it hadn't done very much, which over the last kind of 6-8 months, and that's why I added to it. But I really think that it has more to go because it has lagged. I mean, it's really only up 13% year to date. It trades at 4.4 times price to sales, which is kind of reasonable. You can do a sum of the parts. You guys were talking about cloud. There's only 15% of the workloads in the cloud at this point, and they're growing 28 to 32%. And they're the behemoth in the industry. So I also think that obviously we know about retail e-commerce and how it's going to be a $7 trillion total addressable market. And they're in the game as well. And I really like this MGM deal, gets them into the streaming world in a pretty big way. So I think there's some stuff that has, it's a lot going for it, if you will. So I'm just going to hold on to the bigger size position that I have.
In terms of rates, Steph, I mean, we were talking about how low rates beneficial for growth as well as technology, growth and technology. And I'm wondering, at what point do you think low rates are a negative signal for the markets? How low is too low? How low starts stoking deflationary fears?
I just can't see deflation, and not with all this stimulus in place, not with wages going up every single month in the non-farm payroll job numbers, right? So, and you hear from a variety of different companies that are saying that they're increasing wages. That's going to be actually the thing I'm going to listen to in the quarter coming up, which starts next week. All companies are going to see this, the wage pressures. Can they raise pricing? Can they deal with it, right? And what happens to margins as a result? So that to me is going to be the tell. Look, I think at the end of the day, higher growth, but above trend, a little bit of inflation and low interest rates. I have to say it's Goldilocks for risk on assets and for equities. So I think that's all very good. I think you're going to see earnings growth this quarter of 40%, maybe even better. I like the cyclicals still. I'm not abandoning them, but I do still have this barbell because you do want to participate when you have these rotational trades.
Higher wages, which sectors feel the biggest impact in terms of margins? Is it retail? Because on one side, you have retailers with razor-thin margins paying higher wages, but then you also have their workers having higher wages, which is a good thing.
Right. And I think the consumer is in very good shape. We have a very healthy savings rate. There's a lot of pent-up demand. We all are hearing about it. We all talk to our friends. We know we all want to travel and get out and about. And I think that you have about anywhere from $2 to $3 trillion of pent-up demand from the consumer. So, but yes, we're all going to feel higher prices. I would say this, the consumer staples companies are the ones that actually were notable last quarter when they said every one of them actually is raising prices. So let's watch that sector. And yeah, I absolutely watch consumer in general in terms of higher prices going forward.
Shepard Smith here. Thanks for watching CNBC on YouTube.